So this video that we're watching today is about foreclosures being on the rise. Now, I'm not sure the exact data behind it, but we'll dig in together.
As more homeowners in the U.S. struggle to keep up with mortgage payments and maintenance costs, new data shows the number of property foreclosures is steadily rising. According to property data from Adam, foreclosure filings rose for 6 months straight year over year. And as of August, the number of foreclosures, that was up 18% from the same time last year. Those numbers put the U.S. on track to surpass the roughly 322,000 total properties that went into foreclosure last year.
So foreclosures are up 18% from last year, foreclosure filings. So maybe not foreclosure, okay, homes being repossessed, but the bank's filing for that home to be foreclosed is up 18% from last year, which is interesting because we're coming off of a point where we had the lowest interest rates damn near ever. When interest rates even started being tracked in the 1970s, we had a point where we're coming off of the lowest interest rate ever to now at 6.5%, but prices are so high. So let's dig in some more data.
CBS News contributor Javier David joins us now. He is also a business editor for the Dallas Morning News. Javier, always very good to see you. So despite this surge, U.S. foreclosures, we should mention, do remain well below pre-pandemic levels. Given all that, though, what factors are behind this recent rise we're seeing?
Okay, and before he digs in, just to reiterate, she said, so they have been up 18% from last year, but pre-pandemic levels, they were even higher than they are right now.
Yeah, honestly, it's not just one thing or the other, but one big reason, inflation. It's a stealth tax on everything. And when prices rise, and it inevitably triggers a bunch of series of trade-offs, especially for the working and middle class. And because housing is more than just one monthly payment, there's all sorts of costs associated with home ownership. The things you can't control: plumbing, maintenance, storm damage, insurance. That's a really big cost. All of that costs money in an era of high inflation. It just costs more than it used to. So, for example, there's a statistic that single-family homeowners with a mortgage today pay on average nearly $2,400 more a year for property coverage. That's up nearly 70% from 5 years ago.
That's a huge difference for people's budgets.
Yeah, I have a person I know that's in insurance. They own their own brokerage out here where I live, and I saw him in a gym, and he said, "Man, how you been doing?" I said, "I'm doing okay. I'm doing some commercial construction. It's going well. And I told him how I feel lucky that it's going well because a lot of my other friends and folks in that current situation or in this current economy aren't doing so well." And he said, "Yeah." He said, "As for me," he said, "I'm in insurance. My income has tripled." And I said, "Tripled?" He said, "Insurance is just going up and people are forced to pay." I'm like, this old crook. I'm thinking in my head like, man, but it's facts. It's facts.
What are the options that people have if they're struggling to keep up with these payments?
70%.
Yeah, there are a slew of, believe it or not, the government, which of course is now shut down, has a number of foreclosure assistance programs to help. HUD and FHA have loss mitigation programs. It's designed to ease.
Let me just stop right there. He said he went on to give some resources, but then right before he prefaced it with, "But the government is shut down right now." So basically there's nothing.
These financial hardships, cities and states also have their own sort of programs, nonprofit counseling that'll help cash-strapped borrowers. And a lot of people sort of tend to go into hiding whenever they owe money, and that's not a good idea because when you're behind, you can contact your bank or your mortgage issuer directly because they have their own sort of forgiveness and grace programs to address some of these hardship cases, and even if it's just temporary.
Javier, you bring up the shutdown. How does the shutdown here impact mortgage rates and the real estate market?
Yeah, it's a subterranean economic effect. It kind of depends on how long it lasts. Basically, this shutdown is a source of uncertainty in markets, and that helps drive rates higher, which of course is bad, or lower, which would be good to help kind of stimulate demand for mortgages. Right now, thus far, we haven't seen much of an impact on rates, but the longer the impasse drags on, the more the uncertainty rises, and that's just not good for rate stability.
All right, Javier David, thank you very much for being with us here.
Sure thing.
Interesting. And you know what? If anybody's ever been through any type of foreclosure, um, I would love if you reached out and just gave some resources that folks could potentially tap into, because I'm just not aware. I know he said nonprofits. That's probably a big resource in your city if you were to Google, nonprofits in the area that help with foreclosure, or because a lot of times they'll at least support you with some type of counseling or give you access to some sort of free litigation on behalf. I'm not exactly sure, but I know that we're coming into a time where everything cycles, and it's been on the up and 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 up for so long, since 2007, 2000, whatever it might have been, almost 20 years on an up and up and up, and we all know what goes up must what? Come down. So we'll see what happens. I think my generation has been looking for prices to come down for a long time. And because of that, a lot of us have hesitated to buy. And so I would say and recommend that there is no right time to enter the market. You just enter the market when you're ready to enter the market. That was advice that was given to me, and that I'm going to relay that to you as well. That there is no right time. So, of course, nobody wants to buy at the tip top. But if you look at charts as a whole, there is no tip top, because even though it goes down, it goes up higher after that. And if it goes down, then it goes up higher even after that. Goes down. So same thing. So you buy when you're ready. But this is definitely some data to be aware of, that foreclosures are up, and that shows financial hardships, also shows some opportunity to get in. I'm gone. I'll see you on the next one. Assets only.